the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're tuning in to Money FM 89.3. Time now for Market View with me, Chua Tian Tian, where we take you through how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the companies to watch. But as always, a quick recap of some key movements. Well, Singapore shares were up today to track a positive session in Asia. So if we look at the Straits Times Index, it was up 0.23% at 4,262 points at about 1:30 p.m. Singapore time, and that is with a value turnover of 1.03 billion Sing dollars seen in the broader market. Now let's take you through the closing numbers. The STI ended marginally in the green, up 0.08% at 4,256 points. In terms of value turnover, that's 1.85 billion Sing dollars. Gainers outnumbered losers, 381 versus 188. Top advances for today, we've got for you New Incorporation USD, SGX and BRC Asia. And in terms of decliners, we have here GMH USD, DBS and Cortina. While in terms of counters to watch, we have OCBC, because OCBC announced today the introduction of a $1 billion digital US commercial paper program using the blockchain. Now, elsewhere, from how Singapore's core and headline inflation slowed in July to how oil prices climbed after Ukraine stepped up attacks on Russia, we've got more economic headlines in focus. Also on deck, a look at changes to Singapore Airlines' frequent flyer program and what that would mean for the company and also for investors. Now, joining me on the line today is Chong Ser Jing, co-founder and portfolio manager at Compounder Fund. Ser Jing, welcome back to the show.
Hello, Tian Tian. Glad to be here to chat.
Great to have you on board. And Ser Jing, let's start with regional markets this time around. Asian markets moved higher earlier to track gains seen in Wall Street. We saw, I believe, Dow recording this record high, and that's after Fed Chair Jerome Powell suggested at the Jackson Hole Economic Symposium that there could be interest rate reductions down the road. Take us through the key highlights of Powell's speech and Asian investors' reactions today.
Yeah, sure. So I don't really watch the Federal Reserve's actions in my investing activities, so I do not really have highlights on what happened at the latest Jackson Hole event, apart from a personal observation I have that some market participants have the mistaken notion that the Federal Reserve has completely stopped looking at inflation levels when making its monetary policy decisions. But in reality, what actually happened is that the Federal Reserve had reversed some changes made in 2020 to allow inflation to run moderately above the 2% inflation target, so that there could be some catch-up for previous periods of low inflation. So the Federal Reserve's current policy after the Jackson Hole event is that they will no longer intentionally allow inflation to be higher than the 2% target. And just to be clear, the Federal Reserve still continues to view a longer-run inflation rate of 2% as being most consistent with its dual mandate goals. So I think the mistaken notion happened because of some news articles that wrote the update that the Federal Reserve made to its inflation policy in a way that could be misconstrued. And I think a lot of people just made the mistake because they had not gone to the source documents to look at what Chair Jerome Powell actually said.
If we go back to the Singapore stock market as usual, it seems like markets were pretty positive earlier, tracking gains that we saw in Asia. So how did the STI fare in your opinion, and any surprises if we look at the biggest movers and the sectors to watch?
I didn't really see anything that jumps out to me with the movement of the Straits Times Index and its constituents. The index closed the day up around 0.1%, so really not much movement at all. And most of the constituents have movements within a band of like +2% and -2%, so nothing that really strikes me as being out of the ordinary.
Okay, and if we zoom in on some of the counters to watch surging, we do have OCBC, because OCBC announced the introduction of a $1 billion digital US commercial paper program using the blockchain. It is called the USCP program. How significant of a move is this for OCBC? What do you make of investors' reactions thus far?
So I think it's always a good thing for a company to be experimenting with new technologies that emerge within its industry. So in the case of OCBC, which is in financial services, blockchain and cryptocurrencies have been one of the most prominent new pieces of technology of the financial services industry that emerged in recent years. But I don't think there's any particular significance to the digital U.S. commercial paper program. So OCBC is using the program to basically expand its ability to borrow in US dollars. But for some perspective, OCBC has total borrowings of about 31.6 billion Singapore dollars at the end of 2024, of which 3 billion Singapore dollars worth of borrowings are denominated in the US dollar. So the new USCP program means two things here. So one, it's only a drop in the bucket of OCBC's total borrowings, so it doesn't really change much of the picture. And two, the bank has actually borrowed in the US dollar before, and so it's not something that's new to the bank.
Okay. Now, another counter that we want to keep our eyes on is Singapore Airlines. Basically, Singapore Airlines, from the 1st of November, travelers, they will need to spend more air miles to redeem air tickets or upgrade their seats on certain flights under SIA's frequent flyer program, the Kris Flyer program. What ramifications would that have for investors? Would that dampen consumer sentiment?
So there are actually two components with the change to the to Singapore Airlines Air Miles redemption system. So the first component is like what you said. I think travelers need to spend more air miles to redeem air tickets for certain flights. And on the surface, this does not look like a very consumer-centric move. But on the other hand, there's now a new redemption option named Access that will allow travelers who are redeeming air miles to confirm flight tickets immediately if there are seats available. And from my perspective, this looks like an upgrade to me in terms of the consumer experience with redeeming air miles. So when taken on balance, I don't think there's any major negative development for consumers. And so from that perspective, it shouldn't have any, it shouldn't move the needle much for Singapore Airlines business as a whole. And so from the investing perspective, if there's a change that doesn't really affect the business performance, then I think from an investing perspective, it shouldn't really, there shouldn't be any major changes as well.
Okay. And I just want to bring in some context as well. SIA noted that this is the first adjustment to these rates, some of the rates and the changes since July 2022. And back then, the cost of flight redemptions increased by an average of 10%, with the airline attributing the rise to higher costs. So now it's 2025, we're seeing more changes here. But if you're just tuning in, we're now in conversation with Chong Ser Jing, co-founder and portfolio manager at Compounder Fund. Ser Jing, let's set our sights on Singapore as a whole. We've got the latest core and headline inflation for July out today, and they showed that Singapore's core and headline inflation slowed in July, contrary to economists' expectations that both readings would hold steady at their June rates. So if you look at core inflation, that eased marginally to 0.5% in July. Private sector economists in a Bloomberg poll, they had expected the reading to hold steady at June's 0.6% rate. How far were the numbers in line with your expectations?
So I don't watch such macro numbers in the investing activity I'm involved with professionally in the stock market. So I don't have any opinion on the matter. But if you like, I can share why I think inflation numbers are not that important for long-term investing in stocks, which is what I can speak to. So historically, the level of inflation and the level of valuations of stocks are not clear-cut. So if you look at data from Ben Carlson, who's an investor at Ritholtz Wealth Management, it shows that from 1928 to 2023, U.S. stocks had an average CAPE ratio or cyclically adjusted P ratio of 15 when inflation was less than 0%. When inflation was between 4% and 6%, the average CAPE ratio was 17. And when inflation was more than 6%, the average CAPE ratio was 12. And so these valuation numbers are actually not that far from each other, which suggests that the impact of inflation, assuming of course that we're not in a hyperinflationary or hyper-deflationary environment, the impact of inflation on stock valuations and thus their long-term returns is not exactly significant. So this is like a reason why changes in inflation numbers, especially when they are of these like in a low single-digit range, is not something that I pay too much attention to.
Okay, and away from Singapore, Ser Jing, if I may look at oil prices, they edged higher today after Ukraine stepped up attacks on Russia, fanning concerns that Russian oil supply could be disrupted. What are the levels to watch for oil for the time being?
So oil prices are very important for companies that are related to the commodity, be it if you're an oil and gas producer, oil and gas refiner, you're a distributor, or companies that support these producers and refiners in all different kinds of ways. And oil prices are also very important for investors in such companies because the movement of oil prices can have a significant impact on their long-term business results. But I am not one of those investors because I'm very aware that I do not have the ability to predict the movement of oil prices. So I'm unable to form any judgment on the long-term trajectory of these businesses. So this is a long way of saying that I don't have any useful information to share regarding what are the important levels to watch for oil prices.
Finally, before we let you go, Ser Jing, I'm sure everyone will have their opinions on this company, and this company is AI chip darling Nvidia. Earnings out on Wednesday, I believe, after markets close. Do you think Nvidia will include China in its guidance, or will it follow what AMD did in this regard with regards to its China business? What else should we watch ahead of Nvidia's earnings then?
Yeah, sure. So AMD's latest results were released earlier this month. And the company chose to not include any revenue from China in its forward guidance. We'll see if Nvidia decides to do the same thing. For now, the latest stance adopted by the Trump administration is that Nvidia and AMD can sell certain AI chips to Chinese customers if both these companies pay 15% of their China chip revenues to the U.S. government. But the Trump administration has so far, in my opinion at least, been mercurial in the way they set policy. So I don't think anybody really knows what's going to happen in the near future with regards to Nvidia's ability to sell chips to Chinese customers. So I think these may, influence how Nvidia's management thinks about whether it should be including Chinese revenues in its guidance. I think what will be really interesting to watch with Nvidia's earnings is actually the status of its next generation GPU platform, Rubin. So earlier this month, there were rumors that Nvidia was looking to delay the launch of Rubin so that it can be upgraded to better compete with rival AMD's MI400 family of AI chips. And I think it's really interesting to know if these rumors are true or they're just unfounded rumors.
I see, lots to watch indeed. Thanks so much for the insights today, Ser Jing. That was Chong Ser Jing, co-founder and portfolio manager at Compounder Fund. Thank you so much for joining us on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.